currently almost 4.5% as well. But let's quickly put up something like a Cosmo First as well. That's the first management on the show today. It's on focus on the back of the, of course, quarterly earnings. The stock not reacting too much, but it was a steady quarter with both revenue as well as EBITDA growing in early double digits, and it's led by a 25% increase in sales volume as well. We're now being joined by Pankaj Poddar. He's the Group CEO of Cosmo First. Mr. Poddar, very good afternoon to you, sir, and thanks so much for joining in. My first question, largely on the capacity increase that we've seen in this particular quarter. What does it mean for the company? Is it largely in your existing products, or you're also adding specialty films within this capacity? Give us a lowdown.
Yeah, hi. So we have grown close to 40% in capacity. Obviously, this is just happened recently, and some of it already has been utilized. And given that we are ramping up the capacity over the next few months, this is going to help us both on the specialty and the other BOPP films. Last year, we had installed CPP line as well, and that is again something that we continue to scale up. So we expect that the BOPP line should be fully scaled up by Q4, and that will help both growing specialty films across our different verticals as well as the simple BOPP films. Yeah.
Pretty interesting. Sharad here. Mr. Poddar, we spoke about the overall growth expansion plans for BOPET plans, but the margins front, there is some questions over here. The numbers were largely strong, double digit if you look at the revenue and EBITDA growth, both going up between 19 and 21 odd %, but the margins has been flat. And will this margin pressure actually kind of continue going ahead? Because I presume your raw material costs do have some kind of, crude derivative angle to it, and that is on the lower side. Does this come with a lag, and will we get a margin benefit out of it when we track this sector?
Yes, you see, historically, the raw material cost has impacted the working capital more than anything else. So given that, the raw material is at almost 15 years low levels, it is certainly helping us in bringing down the working capital and keeping that under control. As far as the margins are concerned, it is largely to do with the demand-supply situation. Actually, post unfortunate fire in one of the competitors, the margins did go up. Unfortunately, there were some imports in anticipation by some of the players, and that led to some softening of the margins. The margins are picking up again and should ideally stay stronger in the quarters to come.
Mr. Poddar, in terms of capacity and just a follow-up, because you mentioned that it's almost a 40% increase to your own capacity. How much is that for the organized market for India specifically in terms of addition of total capacity once all of that comes on stream? How much would that be for the whole market in India, and comparing that with yourself as well?
So see, historically, we have always maintained a 50-50 mix, and this is again, we want to continue doing it. In fact, last few quarters, we have increased our exports, in anticipation of this new capacity. So right now, we are actually hovering at close to 60% exports. But as we scale up this new line, we expect to maintain a fair mix of 50-50. And exports is largely a specialty drive for us. So we'll continue on that path to ensure that exports is largely a specialty market for us, while domestic will be a mix of specialty and plain vanilla BOPP films.
Interestingly, Mr. Poddar, any kind of Capex amount for these expansions which have been there, have this been announced for the next 1 to 2 odd years? And if yes, how will the funding be?
So see, right now we are in a phase of consolidation and, taking leverage from all the investments we have done in the last 3-4 years. If you really see, we have invested, post-COVID, we have invested close to 1,600 crores. And now we want to take a bit of pause, consolidate here. We've added newer businesses, we have added capacities in film business. So next 1.5 years, we would not be investing as much Capex. Obviously, this year, there is a pre-committed Capex of close to 250 crores. But for the next year, we may not be doing much of Capex. We would like to just consolidate and make sure that we take full leverage and benefits of all the investments we have done.
Mr. Poddar, with the added capacity, you mentioned that a lot of the exports is largely of the specialty films. what should be the sustainable margin range that we should look at for? Because over the last 2 to 3 years, margins have been volatile either on the upside or the downside. So should a sustainable range be 12 to 15% maybe in the next 2 to 3 years?
Yeah, I would say that, if you see Cosmo history, irrespective of the markets, we've always stayed in the double digits. Our 5 to 7 year average should easily be anywhere between 12 to 15%. And, we would obviously love to take it beyond this. But a realistic number, I would say, is a 12 to 15 number, which is what we have been doing for last few years. Obviously, the new businesses has a potential to do much more, but they will need its own time because two businesses we did start, say, in 21, 22. And the two other businesses we started in the last 1.5 years. And they're all scaling up nicely and they will continue. And these are, again, very high specialty or technological businesses, and they will, or either consumer businesses. So they will all add up to the profitability as the time
That's the management. Speaking about the growth plans coming in for Cosmo First, thank you very much, Mr. Poddar, for taking out the time at NDTV Profit. Now moving on from one management to another management, another